So in this video, I'm going to show you guys how you can maximize your profits by understanding the concept of funding rates. Before we go on, be sure to hit the like and subscribe button, and be sure to check out our amazing Telegram community. Link is down in the description. Now, for those who don't know about our Telegram community, it's basically a community where we post trade signals, trade setups, trade analysis, market analysis on a daily basis. It's really been bringing a lot of value to our members, and the great thing is it's completely free for now. And yeah, it's just been bringing a lot of value. We post daily videos, live streams, trade entries with very specific take profits and stop losses, and we direct you guys exactly how to navigate these volatile markets. So be sure to check this out, and of course, if you guys have any questions, please drop them in the comments. Now, let's actually move on to the topic at hand, which is funding rates. So I'm going to bring up this little graphic that I have, which is the Bitcoin funding rate chart from Coinglass. And well, before we move on, let's explain what funding rates are. So essentially, funding rates are a unique concept to the futures markets in crypto, and they essentially serve as a balancing mechanisms for the futures markets. So, the funding rate can either be positive or negative, right? So what a positive funding rate means, and you can see the price or the percentage scale on the left here on this chart. It has percentages going from positive down to negative values. So when you see a positive percentage, this means that the market is a bit out of balance to the long side, right? That means there are more longs than shorts on the table. So that means that to kind of like compensate for the imbalance, the long positions have to pay the short positions, right? So that kind of incentivizes the market to kind of like bring the market more into alignment or more into balance. So when the funding rate becomes positive, it can sometimes get pretty expensive to hold long positions because these fees start adding up. And in this case, this incentivizes shorts to put on basically short positions because then they get paid from the longs, right? Now, this could also work in the opposite direction. So sometimes the funding rate can be negative, right? And this means that when the funding rate gets negative, there are more shorts than longs on the table, and so that incentivizes the other market participants to go long, so they get paid for holding a long position, if that makes sense. Now, I know this might be a little bit of a hard concept to understand, but it's actually very easy, and you can actually see this visually when you go on the chart. You can see when the funding rate becomes excessively positive, this is this could also be used as a sentiment indicator, right? Which is how you can actually really get alpha from this concept known as funding rate. So you can see when we have this big spike in the funding rate here, this basically marked the top of this particular section in the market when Bitcoin was trading at around almost 100,000, and this marked the top for that particular month. And you can also see that when the funding rate gets very negative, like it did over here in April, this marked basically the bottom. So I want you guys to actually play around with this. Go to either Coinglass or CoinGecko or another on-chain metric website and examine how these relationships basically work with each other. So examine the funding rate versus the price of Bitcoin, and you can see how this can actually be used as a sentiment indicator. So yeah, I think that's the alpha for today. Once again, be sure to subscribe to our Telegram channels, hit the like and subscribe, and we'll see you guys in the next video. All right, take care.